Hello and welcome to the look ahead for Wednesday, the 13th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow on the economic calendar, it's a little bit quieter than today after the excitement with US inflation figures and UK jobs data. We still do have more data from the UK due tomorrow. The focus will be on GDP. Now, expectations are for UK GDP to contract in the 3 months to January by 0.1%. That's down. That's an improvement, I would say, on the last 3 months of 2023, where the economy contracted 0.3%. But if we look on a month-on-month basis, then GDP is expected to rise 0.2%, and that's after a contraction of 0.1% in December of last year. So we know that the recession, the UK tipped into recession at the end of last year. However, there are sort of signs that maybe actually this is going to be a relatively shallow recession and a short-lived one. We obviously had the data from the OBR when the Chancellor's budget, which was upwardly revised, suggesting that the recession would be short-lived, and also PMI data for the UK, particularly the service sector, which is the dominant sector, has been strong at the start of the new year. Now, let's just take a look at what all this might mean for the FTSE. Just having a look here at the FTSE chart, we can see that it's been trending higher, actually. I mean, after picking up from sort of lows towards the beginning of the year, it's been seeing a series of higher lows. It's trading above the 200 SMA. And in fact, it's rebounded quite strongly from that support at 76, testing resistance now at that sort of 77.65 level. That's where buyers are really going to want to see a move above there to bring the 7800 level into focus. And if we can get a rise above there, then it'll be the 7900, which was the May 2023 high, will be into focus. On the downside, as far as support's concerned, I mean, I think that 7600 is a fairly solid support that we're looking at there. If sellers did break below there, that would be creating a lower low, and it would bring the 200 SMA at 75.50 into focus. Just as far as other data tomorrow, as I said, there's not a lot going on. We do have the Eurozone industrial production, which is also due to be released, expected to fall 1.5% month on month. Now, the data comes, this week's a relatively quiet week as far as Eurozone data is concerned. We did have the ECB interest rate decision last week, where they left interest rates on hold at record high of 4%, but did downwardly revise growth and inflation forecasts and signaled to that June interest rate cut. Now, let's just have a look at what's been going on with the Euro US dollar. We have seen the Euro US dollar has been pushing higher across the past month or so, but that's basically on the back of a lot of US dollar weakness. Now, obviously, today we did have the US inflation figures out, which were stronger than expected. We can see that we've just seen that pull off in that easing off in the Euro US dollar. But it actually, overall, the trend line, the rising trend line remains in place. The Euro US dollar is also trading above that 200 SMA. It's just testing support around that 920 level. I think if we did get a break below there, then we'd be looking potentially for a fall towards the 200 SMA, which is around the 108.40 level. But I'm constructive on this as long as it sort of remains above that level. On the upside, buyers are going to be looking to continue the upward trend towards 110. That's the key psychological level. So I hope you liked what you have seen today. And if you do, then please do give this video a like. And if you would like to receive more videos like this, then don't forget to give it a follow.